Hey everybody, Chuck Barone, Monday, September the 12th, 2022. A great day to be alive and an interesting day in the stock market and all the markets today. A lot of information to pass along, a lot of big stuff going down this week. We'll get into all of it today. As always, we just want to thank everybody for their support for the show, for watching the videos, all your likes and questions and comments and all the stuff you guys do every day to make the show a success. We really appreciate you guys. In the markets today, stock market up across the board, a good day for the market. Dow, NASDAQ, and S&P all advancing. The number with gainers and losers was certainly pretty exaggerated today to the gainers. I think the stock market is feeling like some of this new inflation data coming is going to be a little more favorable. Looks like, well, you know, with gasoline prices coming down from over $5 to under $3.80, that's a pretty dramatic move. So that is bringing down the top line CPI numbers. I think the stock market is buoyed by that, thinking that the Fed may not be as aggressive as they're afraid they're going to be, giving stocks a little bit of a reason to bounce today. Plus, the truth of the matter is earnings are still there for most of these companies. We're getting a lot of earnings coming out, and there just hasn't been a lot of shocks to the downside. So the market's got reason to move, depending on, of course, the actions of the Federal Reserve. Today, bond market down, bonds selling off. The 2-year sitting at 3.36%, which is a pretty high number for the 10-year. I think it's a number the stock market's not really comfortable with, but obviously, by the results today, getting comfortable with. The 2-year, in contrast, sitting at 3.57. So we got basically now a 20 basis point difference in this inverted yield curve. Looks like the bond market is just further giving us a signal that, you know, this recession's on. It's still coming, obviously. Is it just starting to pick up speed? And the bond market yield curve looks kind of weird. At least it's kind of not all pervy like it was looking. Now it's a straight inversion with 2, 5, 10, 30 all correct, lined up like they're supposed to be in a real inversion. The dollar today was down but small, still holding strong at 108.35 on the dollar index. It looks like the dollar is still the king of currencies. I really didn't see much of a reason for anybody to be selling dollars today. I was surprised the index was down, but I guess the euro, raising theirs, creeping up to 0.75 of a point on their interest rates, was enough to knock the dollar down a peg, but still super strong. Anyway, with this little bit of a knockdown on the dollar, it gave metals a little bit of room to run to the upside today. So metals had a good day. Gold and silver both up today, with gold settling at 1,720, my bad vision, $1,726 per ounce. Silver at $19.85 per ounce. A nice little rally for silver from its bounce off its low. Looks like metals want to make a move to the upside. Got the strong dollar in the way. If there is a little bit of a revision to this dollar index number, I think you're going to see gold and silver, especially looks like silver wants to run, have a pretty nice move to the upside. Now, oil today, up market again for oil, $87.95 for West Texas Intermediate, $8.37 for natural gas today, both up pretty dramatically. Well, not dramatically, but a couple, 1.5 to 2% moves. And energy is going to remain volatile. There's just too many variables right now to be playing with energy. If you're a person that's playing the market every day and can be in and out of positions a couple times a day, maybe the oil and natural gas are for you. But this is a crazy one right now with a ton of volatility. Bitcoin today up over 22,000, almost at 22,500. Looking for Bitcoin's having a nice rally. I would like to see Bitcoin start to consolidate here and stop zip up and downing. Let's hang out at a number that's a trading range and build some strength there. But Bitcoin up today and up nicely. Today is like we do every Monday, letting you know what's coming out. This is a big week for data. A lot of important stuff coming out this week. Tomorrow we're going to have the CPI numbers. That's going to be a big one for the Federal Reserve coming up. Their meeting, their Federal Open Market Committee meeting. Will it be a half? Will it be 3/4? This CPI number tomorrow going to be an important part of that, I think. Also tomorrow we'll get deficit numbers, and they're expecting the deficit to be up, of course. The CPI numbers, they're expecting core to be 6%, which would be up from 5.9 last month. They're expecting the top line CPI number up 8% year over year, down from 8.5 and down from a peak of 9.1. So these numbers, these are the estimates. These are the numbers that are getting people excited about the Fed not having to grow as hard and long as they thought they might have to get these inflation numbers down. On Wednesday, we'll get the PPI numbers. That's the Producer Price Index, what it costs to create the goods and services that got bought on the CPI, the Consumer Price Index, right? Now, they're expecting the Producer Price Index numbers actually to be down. And also on Wednesday, we'll get the Mortgage Brokers Index, which will again show more pain and gruesomeness in the real estate market. On Thursday is a monster day for data, guys. We get a ton of data coming on Thursday. We get business inventories. We get industrial capacity utilization. We get the Empire Manufacturing Index. We get Import Price Index. We get industrial production numbers. We get initial jobless claims. We get the Philly Fed survey, and we also get retail sales numbers. So this is going to be a huge day. Now, maybe not as important as that CPI number we're going to get tomorrow, but this is a big day that's going to give the Fed a real indication of where this economy is as far as manufacturing, jobs, and a whole bunch of other important data for them to consider. We'll go over all of this stuff in detail on Thursday, so we'll get a better idea of where we think the Fed's going to end up. I'm still kind of believing they're going to go 3/4, but with this data coming out this week, we'll see if there's any indication that that might change. And then to close the week out on Friday, we get the Michigan Consumer Index, which is a measure of consumer sentiment, how do consumers feel about the economy, and they're expecting that to be up. Some stuff that I thought was interesting you guys need to hear about today. This month is September. Supposedly this is the first month that the Fed's going to their QT, their qualitative tightening, supposed to be pulling $95 billion a month out of the economy. I think that that's going to put more pressure on rates to move those rates up. I think that might be part of the reason rates are moving. This QT is not really showing up yet in the Fed's balance sheet for September. We'll see how it ends up into the end of the month here. But what do you guys think? I mean, do you think the Fed's going to follow through and pull out, up to $100 billion a month, every month out of this economy? What will that do to the economy with the rate increase as well? When you're pulling all this liquidity out of the markets, I think that might contribute to some kind of liquidity issues. That's a pretty big number. They're expecting to pull $2.25 trillion off their balance sheet by 2025 with this QT. That's going to have a big effect on the economy, man. That is money that's pretty much going dead, not going to be in circulation. I don't know if there's ever been a time that I can remember where the Fed pulled this much liquidity out of the market. Let's see how this all plays out, and do they have the stones to follow through with these gigantic numbers? Other interesting little tidbits today. Goldman Sachs out today cutting hundreds of jobs. So the biggest bulls on Wall Street are apparently feeling like they might need to cut their employment. Mortgage debt climbing, $226 billion in the second quarter. A lot of this money now, the new favorite for consumers is these HELOC loans. They're going back to these home equity line of credits. I'm not a big fan of these because it's my humble opinion that they typically never get paid off. They only get refied into the first mortgage later. So if you're thinking about doing this type of loan, just be cautious, guys. Make sure to read the fine print, know where you're going. Is your rate fixed? Is it adjustable? Where are you going to be with this loan in 5 years? Plus, it kind of creates a temptation to pull equity out of your house, which should be your biggest piggy bank. So just be cautious with these HELOCs. Also, don't forget that interest rate increases, and I've been telling you guys this. Interest rate increases alone don't do anything to bring down inflation, guys. Interest rate increases cause a recession, and that lack of demand in a recession brings down inflation because of supply and demand issue, right? So remember that. When people talk about will there be a recession, won't there be, when you have when people are cheering 8% inflation as a great number coming down, know that you're not getting rid of this without the Fed causing a recession. So we've been telling you guys this for a long time. This is not new news to you guys. Know it. It's in the bank. It's every day we see more and more evidence that we've been right on this. Here's an interesting finish today. I was reading that they said, this inflation, they said up to 50% of consumer inflation could be what they're calling profit inflation. Meaning corporations are using this inflation situation as a screen to raise their own profits, their own margins. It's been crazy, man. The S&P profit margins were up 17.6 in 2021. 2022 numbers look like they're going to be even higher than that. Profit margins, 15.5% so far this year. The best profit margins corporations in this country have seen since 1950. So, these guys are using this inflation as an opportunity to raise their prices with no corresponding increase in value, right? Driving up margins, driving up profits. So far this year, there's been $300 billion in stock buybacks. CEO pay is right now 324 times the average worker's pay, meaning that basically the boss makes more every single day of the year than you make in the whole year. CEO pay is rising 5 times faster than wages are. So the bosses and the corporations are having a lot of fun with this, making tons of extra money for themselves and their shareholders. Meanwhile, us, the schmuckatellis, right? How are we doing, guys? Well, here's some interesting statistics I was reading today. 71% of Americans polled, and I would guess most of you guys watching this show are in the 71%, say they are cutting back on spending this year. Less money for birthdays, less money for holidays, less money for this and that. People are actually trying to save a little bit more money, I hope. 71% cutting back on spending. Over 60% of the United States population of working people now are living paycheck to paycheck. So 6 out of every 10 living paycheck to paycheck, don't have money stashed. Not very good, guys, right? 60% say that, this was an interesting one, over 60%, now they've calculated it out, over 60% of the stimulus money that went out was spent on the necessaries, food and rent. So the idea that this stimulus money was a big driver of this inflation, people are just paying their rent and buying food. That's not usually an inflation driver. So I thought that was an interesting little tidbit to pass along. 1 in 10 people in the United States does not have enough food to eat right now. So 10% of our population don't have enough food. And millions of people who do have enough food, nonetheless, are changing around the way they're eating, cutting back on meat and produce. So the rich are getting richer, guys. The poor are getting poorer. Nothing new there. Anyway, that's what we got for today. We appreciate you guys tuning in. Hang in there, guys. We got some tough times coming up, but if you've been following our advice, you should be in pretty good shape. As always, we appreciate your guys' support. If you like what you're hearing, hit like. Share the video with your friends. Don't forget to ask questions in your comments. Make sure to hit us up on those. If you haven't already, subscribe and double check your subscriptions. Again, we're getting messed with by YouTube here, it looks like. Double check your notifications, making sure you're getting notified our videos coming out. As always, guys, we appreciate you. Huge week coming up. We'll talk to you guys again tomorrow. Thanks.